Good evening, friends, and welcome to another video by the Option School. This is your friend Pradeep Singla. So, you must know that what is the difference between hedging और margin management. Many times, many traders come to us. बहुत बार ट्रेडर आते हैं बोलते हैं सर मैंने तो hedging भी किया हुआ था लेकिन उसके बाद भी मेरे ट्रेड में लॉस क्यों हो गया। तो जब उनका ध्यान से हम लोग ट्रेड देखें तो वहां पे hedging नहीं किया होता, hedging की जगह शायद उन्होंने मार्जिन मैनेजमेंट किया हुआ था। So what is the difference between hedging and margin management? And let us try to understand this. What is the difference so that we are better off while we are taking our trades. Now, in hedging, what happens if you are doing right kind of hedging, it should reduce the possible loss considerably. जो trade में loss हो सकता है, उसको काफी ज्यादा significantly वो loss को reduce करे, तो उसको हम कहेंगे कि हाँ इसने trade में hedging किया है. It will definitely automatically reduce the margin requirement also if you have a unhedged trade compared to a hedged trade. Hedged trade will always require lesser margin. And another negative thing about hedging is that okay, it will reduce the possible profit also. So three things: it will reduce the possible loss, it will reduce the possible profit, it will also reduce the margin requirement. And if all these three conditions are met, then we can say yes, we have done a hedging. Now, depending upon how much possible loss is reduced, कितना loss reduce होता है, कितना profit reduce होता है, कितना margin reduce, उस पर depend करता है कि hedging right है कि hedging थोड़ी सी aggressive है. Now, as against this, if you see margin management will also reduce the margin requirement. Now, because margin management reduces the margin requirement, sometimes we take it wrongly as if we have done a hedging, because margin management will not reduce any significant possible loss और प्रॉफिट. जितना प्रॉफिट हो सकता था उतना ही प्रॉफिट होगा, जितना लॉस हो सकता उतना ही लॉस होगा. सिर्फ और सिर्फ मार्जिन का जो रिक्वायरमेंट है वो कम हो जाएगा. Then we say this is margin management, this is not hedging. I will give you all these examples using uh, Opstra. Let me take this screen to Opstra so that we are able to understand it better. Now if I go to Opstra and share my screen with you. So first thing which I will show is, let us say this is the let us say we are taking one options trade and market is at around 18,200. We say 18,300 call we are selling. So if I sell this 18,300 call, what will happen? This is a naked trade with unlimited loss. If you see on this side, there is a unlimited loss. The maximum profit is 6,200 rupees, and the margin required is 79465. Now, this is not a risk defined trade. This is a unhedged trade. There is no margin management also. 100% margin is charged to this trade. Now, first, what I will do, I will try to manage my margin, because I think that no, I do not have this kind of margin. मुझे इतना margin नहीं देना है, मेरे को तो काफी कम मार्जिन देना है और मेरे को सिमिलर सा ट्रेड लेना है. तो व्हाट आई कैन डू इज, आई विल गो टू अ वीकली ऑप्शन, maybe a far off 18,800 call, and I find that the price of this option is only 1 rupee 60 paisa. So I will buy one call of 18,800 of weekly. Now see what difference it has created. बहुत थोड़ा सा difference, very small difference in the total profit. Earlier it was 6,200, now it is 6,120. Just 80 rupees we have spent in buying this call. And you see the margin requirement has reduced significantly. Margin requirement from 79,000 has gone down to 37,000. It has reduced to almost 50%. This is margin management. But if you see what has happened to loss, earlier it was unlimited loss, now it is 21,000. But in a trade of 37,000, even 21,000 is as good as unlimited loss, right? Although the strategy has become risk defined, if you see after this point, it will not give me extra loss. But obviously, even this loss is a huge loss. So if you say my strategy is risk defined, it can give me a profit of 6,000 rupees, but it can give me a loss of 21,000. It is not a risk defined strategy. It is absolutely as good as naked strategy. So only benefit, जो थोड़ा benefit इसमें मिला है, because we have परचेज्ड 18,800 कॉल, तो हमें जो मार्जिन का बेनिफिट है वो मिल गया है. नाउ द मार्जिन रिक्वायरमेंट हैज रिड्यूस्ड drastically. This is margin management. This is no hedging at all. In this case, definitely the trader can lose money in case market moves significantly up, and he can lose a decent amount of money. It may not be a small amount of money. 21,000 on a trade of 37,000 is a huge money, right? Now, if I remove this, I say no, this is margin management. This is not hedging. Let me try to show what can be hedging. Now, 18,300 call. There can be different ways to hedge this trade. Simplest is that okay, I go to that same 25th January only, और सबसे जो सिंपल hedging में कर सकता हूँ 200 पॉइंट्स दूर का 18,500 का कॉल I will buy. Now once I buy this, I have given 58 rupees in buying this. See what has happened now. Now the trade can give me a profit of 3,275. That's a maximum profit, but my maximum loss, which was earlier 21,000 rupees, is now only 6,000 rupees, 6,700 rupees. And see what has happened to margin. Margin has also reduced by almost one third. It has become almost one third. जो 79,000 था वो अब 26,000 हो गया है. And you can say, sir, the percentage loss is still very high because 6725 divided by 26,000 is very high. But if you see the original trade was charging you 79,000 rupees, and on 79,000 rupees, if you see 6,700 is a small loss. 7-8% is not that big, although it's also big. But there is a reduction in profit. Yes, in absolute terms, reduction in profit is there. In absolute term, huge reduction in loss is there, and definitely a huge reduction in uh, margin is there when we have done this hedging. So this is one of the examples of hedging. This is not only margin management. Here we are obviously getting the benefit of margin, but we are doing a hedging also. Now you can say what can be other hedging. So this was a sort of a complete hedging. So I can have a partial hedging also. Partial hedging means if I'm selling 18,300 call, let us say I sell 18,100 put also. So what will happen? The put price to some extent will provide me a hedge for any losses in the call. So in this case, this is a short strangle. The trade is safe on expiry between 17,808 to 18,592. Again, this is not complete hedging. This is again undefined risk. You can lose a decent amount of money, and there is no margin benefit also. Now suppose I want to hedge this trade from both the sides. So what one of the ways what I can do is I can buy a 17,800 put, since I have sold 18,100 put, and since I have sold 18,300 call, I will buy, let us say, 18,500 call also. So on both the sides I have done a hedging. Sorry. Now this is a sort of an iron condor where my margin requirement, see, from 1,30,000 has again got reduced to only 51,000. Maximum loss is 7,245, maximum profit is 7,755. So it is a risk defined trade, 1:1 profit versus loss, and there is a decent range, and the amount of margin required is also very low compared to a naked short strangle. So this again becomes an example of complete hedging where this red, the horizontal line is horizontal, right? It is not a slanting line where it can go to unlimited loss. So once your trade has achieved this line horizontally, then that means you have a defined risk, a fixed risk hai. But another point to be noted is even when you have done hedging, that doesn't mean that trade cannot lose. Hedging means there is a defined risk, but risk is still there. So in this case also, in spite of doing a complete hedging, a trader is taking a risk of 7,245 rupees unless and until he do some adjustment, unless and until market comes within his zone, or he squares off the position much before this loss happens. So those are all options available with the trader. But if you see in broader sense, if he doesn't want to do anything with the trade and allow the trade to expire on last day, which is not a very good choice, then definitely there is a risk of 7,245, but it is a fixed risk. So that is the benefit of hedging, that my risk is defined. I know beforehand that okay, this is my maximum risk in the trade, and there is no unlimited risk, and the margin requirement also reduces. But instead of this kind of hedging, I again buy a weekly option. Then obviously I will be spending less money. I will be able to reduce margin to some extent, but still my losses can be pretty high. So margin management is margin management, that doesn't provide you with a very good hedging. And hedging is hedging, that helps you in margin management also, but it also helps to limit your losses. Hopefully the concept is clear. I've tried to explain it with an example also, right? And let us go back to our presentation once again and uh, cover the rest of the presentation. So now you will understand that right hedging should reduce the possible loss. Management will reduce the margin requirement only. Let me ask you one question just to check whether you have understood the concept clearly or not. All of you are requested to write your answer in the comment section. When you buy a very low cost weekly option, I've shown you the example. This option is purchased against selling of monthly option. Are you hedging or are you managing margin? Whether your answer is A or whether your answer is B, write it in the comment section and I will try to clarify in case you are getting a wrong answer. In addition to that, if you have any other questions, feel free to write it in the comment section and we will be more than happy to answer all your questions. Now we have done a very beautiful webinar on portfolio allocation in option strategies. So always we are in a dilemma, especially in the beginning of the month, that how much money I should allocate to different strategies. क्या मैं कैलेंडर स्प्रेड को ज़्यादा पैसे दे दूं या मैं स्ट्रेडल को ज़्यादा पैसे दे दूं या स्ट्रैंगल को दे दूं या मैं सिर्फ आयरन बटरफ्लाई बनाऊं, तो हमेशा एक कंफ्यूजन रहता है राइट इन द बिगनिंग ऑफ द मंथ कि यार कितना करूं, क्या मैं कहीं ओवर इन्वेस्ट ना कर दूं, कहीं अंडर इन्वेस्ट ना कर दूं. So what is the one of the best ways of allocating money to different option strategies? We have done a webinar on this and we have recorded that webinar and we are exclusively giving this webinar to all our the option school toss app users. So if you want to access this webinar, please go ahead, download the TOS app. Both Android as well as iOS link are given in the description. And once you have downloaded that, there we will you can request us and we will share this webinar with all of you. So hopefully you will find this webinar very useful in deciding how to allocate your funds for different option trading strategies. Thanks for watching and see you in the next video. Bye bye.